This is our fourth video in how to pass a prop firm evaluation. Now please stick around to the end of this video because I'm going to go right in depth in this video. So please give yourself I don't know if this video is going to be 20 minutes, 30 minutes, but please give yourself the time, watch this video because I'm going to go in depth into the psychology, what I'm thinking when I'm taking a trade, all the things I'm looking at. So I'm going to cover that in this video. All the previous videos of these weeks here, we've made week 1, week 2, week 3, and this is week 4. So the first 3 weeks we've literally just been going over trades that we've took, and this is why we ended up with these numbers. So for those of you who are new to the channel, I've been trading for several years, but I've been on a personal account. I switched over to futures and prop firm recently, and I have never passed a challenge. I'm recording this journey, hopefully we can pass it together. And yes, I'm going to get into very great detail on my psychology and what I use as an entry and exit criteria. So you can see here we are literally $100 away from passing our first challenge. If you look here, now for me, you shouldn't be in a challenge, especially with Top Step, because they give you a free reset every month. So you shouldn't be in a challenge for any more than 2 weeks. You should say to yourself, 1, 2, 3, I'm averaging 4 trades. So if your max loss is 3,000, you should divide your 3,000 by however many trades you've took, and that should be your stop loss. So we were trading in the beginning with a £500 stop loss, then we put it up to a £750 stop loss, because really we want to either pass or fail in the first 2 weeks. If we fail, we get another bite at it in the next 2 weeks, and then it resets at the end of the month. So in this calendar month you're looking at just now, I actually had 2 chances. I never used them. I'm still on the first chance because things were going so well. You can see in the first 2 weeks there I had no losing days, and you can see my psychology was very good because you can see that I've decided to sit out on the 6th, the Thursday, and Tuesday the 11th because I never seen a setup. So it's very important as well. A big thing for new traders is we're programmed from a young age that you go out and work for a living and you're getting basically paid for the time. You're either on a salary or you're on an hourly rate, and you're basically getting paid for your time. So when you come over to trading and you sit at a screen for 2 hours and you don't see a setup, psychologically you make stupid decisions because you feel as if you should be presented with an opportunity or you should be paid because you've invested the time. Trading doesn't work like this. You may get paid $2,000 on Monday and you may get paid 0 on Tuesday. That's just the way it works, and you need to understand that there's days where you just need to leave the market alone. So first thing we're going to do is we're going to go over the trades that I took this week, and then we're going to go over really what I'm looking for, really what's my mindset when I'm taking a trade, and everything I'm looking at, we'll go over that. So let's start here with the Monday. So Monday I wasn't going to trade. I think I did have a loss here and then I recovered the loss. And again, I've been asked several times, but when you see 7 trades, 5 trades, 2 trades, I never take any more than 2 trades on a day. But obviously Top Step pick it up as if I scale into a trade. So if I buy 2 positions, let's say I buy 10 micros, and I buy another 10 micros, and then I sell 10 micros, and then I sell the final 10. That to Top Step is 4 separate trades. Okay. So if you're scaling in and scaling out, it's all classed as a trade. Apart from this day here, where I went back to an old scalping strategy that I'm not even going to discuss in this video, but I had a big loss on this day, and I recovered it by sitting in front of the market for about 4 hours scalping. It's not something I recommend because if you're doing that, you're very, very, very much more inclined to go and tilt and blow your account. So that was the only day where I had more than 2 trades. So let's start. We'll go to trading view and we'll look at the trades taken here on the 24th. So very simple. So first off, let's discuss what I am looking at. So there's 4 criteria that must be met before I enter a trade, right? Now you hear everybody talking about sessions. So whether you're trading New York session, London session or Asia session, and people trade these because that's where the volume is, right? But not always. Just because you're in New York session, right? So from 9:30 Eastern, that's when it opens. It doesn't necessarily mean to say there's going to be volume. You may have missed something. It may be a bank holiday, it may be Thanksgiving like this week. It may be just that the market's flat because there was lots of volume sometimes in Asia or lots of volume sometimes in London, and you'll find that the New York market sometimes is flat and you're not getting the volume. So it's not just a case of, oh, I'm in the session, so if I get a clean range, number 3, and I break a level, number 4, I'm going to take a trade. No, you need volume, okay? So we're just saying here 1 and 2 are kind of combined. The volume only typically comes during the session. That's the only reason why we've got a session here is number 1, right? But the most important thing is the volume and not the session. So what I do, I've got the volume indicator here, and I've basically, you can see the little blue line there. The little blue line, that's a moving average that's on the volume indicator. Okay, so see here where it's below. If this was during any session, I'm not trading, right? So I need to be, I would even trade out with a session if I seen volume above the moving average. I don't, because I'm not at the computer, I'm not sitting there all day watching a screen, right? But if I did see volume that wasn't in a session and 3 and 4, so 2, 3 and 4 is the most important. The session is just saying that it's during the session that 90% of the time, that's when you'll get the volume. So it's very important you're not taking the trade because you're just in a session. You need the volume to be there as well. Again, the volume is above this blue line. If I can just go back to the indicator, volume, just this here, volume, moving average, and it's set to 20. So, we need to be in a session, we need volume. The next thing is we need a clean range. The clean range is the clean range to the left, something to trade into. So you can see here, highlighted in yellow, we've got this clean range, and a clean range is defined by, see these 2 big bearish candles that come down? And then this big bearish candle here as well. I know there's a little bit of consolidation here, but this to me is a nice range to trade into, because we could at least go to here and it would get me a 1-to-1, and up here we've got a 2-to-1. So that was the range. So the range is there. So the next thing is if we break a level with volume during a session, trading into a clean range, we are taking a trade. So you can see here we had this resistance form here. During the session, the volume come in, you can see the volume down here is above the blue line. We took the trade. Your stop loss was tight enough. If your stop loss is way down here, and we'll go into that at the end of the video, I'll leave that for now. That's what I'm going to show you my mindset with taking a trade. So that was it. Good trade, and that was Monday. So we move into Tuesday with another nice day here on Tuesday. So what did we see? Number 1, we're in a session. Number 2, we've got this clean range here. See how this came down? So if we just expand this, you can see it a little bit better. So this here is a clean range. 3 bearish candles with very little resistance, support being formed. No noise basically. So here, we took the trade here. A number of reasons, right? You see VWAP? VWAP is this purple line here. So the volume weighted average price. we've got it set here, and we've got ours set to session, and we're on this setting here. So we came through VWAP, so that was one confirmation, and then we broke this level. As you can see, I entered the trade just as we broke through VWAP, and because we had this big bullish candle here in the session, came through VWAP, entered the trade. Where did we target? Here. Nice trade. Very simple, very, very simple. Session, clean range, volume, break level. So that was Tuesday. And we come on to Wednesday. So this was our losing day. So again, you can see here we've got a level. Okay, level. If you look down here, we do have volume coming through. But what do you notice? 11:30. Well, not in session. So I was wrong to take this trade. So I took this trade because I lost this trade, sorry, because I broke my own rule. I seen something, I thought it looked great, breaking a really good resistance here because we'd bounced off at 1, 2, 3, 4. So I said I'm going to get in early. And yep, I was punished and I lost the trade. The other thing I was thinking is we're coming off a VWAP here as well, and I was thinking we're just going to come up further. But it wasn't to be, and again I broke my own rule. I wasn't in the session. So we had volume, we had a level, but we never had a session. Also, did we have a clean range? There is a clean range here. But again, we weren't in session. So that takes us to the next day. Here, again, this was actually a mistake. I thought I was in demo. This was Thanksgiving, so we'll not go over that trade. It was just closed rather quickly. So this trade here, I'll switch over to Top Step to show you this trade. So this was the trade on the Friday here, and this was the biggest trade we've ever had. So I want to show you something, and I'll show you on Top Step. So what I've noticed in my journey through here, right, these are these two trades here where I took 20 lots and 20 lots. Look, I was in one of them for 57 seconds and one of them for 90 seconds, and I earned $2,500 in less than a minute and in less than 2 minutes. So I'm seeing a pattern in my trades where I tend to do better the shorter I'm in, and that's because I'm getting what I call a surge. I seem to be really predicting the surge very well, and I'm in the trade for a very short period of time. So this trade here, I had a feeling that this is where we entered here, breaking this level here. So this was a short. So I entered this twice. I entered it here, and I entered it when we broke the body of this candle here. And I just had a feeling that this was going to come back down to VWAP because we had come up so high. Okay, we had just come up so high here, and I felt it was just going to retrace before continuing up. And I took a trade continuing up as well, and I lost that. But the way I trade, again, is if you have a winning trade in your first trade and you lose that money in a second trade, you really need to go and have a serious word with yourself, because if you win even, let's say even $100, right? If you win $100, the next trade, if you do take a second trade, you shouldn't be risking any more than $50. The same as if you win $1,000, your second trade, you shouldn't be risking any more than $500. So regardless of what happens, you're ending the day up, you're ending the day green. It's absolute insanity to risk the profits you've won from a first trade. If you're doing that, you need to stop it. So back to this trade. So I had these two levels drawn out here, and I said if this red candle here is retraced back, it's an indecisive candle, but you can see here, this means the buyers, it's burnout, and it's typically going to come down for a bigger retracement, and that's just through my experience looking at the candles, this is an indecision candle. It's got the same size of wick at the top and bottom and a small body. It never closed above the previous body either. The wick never closed above the previous wick. So this is telling me there's going to be a further retracement. But that's something that comes through time, learning stuff like this. But yeah, I drew this line and I said if we do break this line, I'm going to go long. If we break the wicks here, I'm going to go short. So we broke this wick and I came into a short position and I added to it. So that was a great win there, and we are now sitting at 5,857. I was at actually 5,960 something. I mean, I basically needed less than $40 to pass this challenge. Yeah, so we're going great. Hopefully we'll get an A+ set up next week, and I'm going to move on to a fresh account as well. So I'm going to start a new evaluation and try and pass another one. But let's go back and look at the mindset. So last week was a very difficult week to trade because two things happened. We had Thanksgiving and we also had the change of contracts. So the futures contract changed over from the December contract to the March contract. So usually you would sit out a few days when the contract switches over. So let me go into the previous contract and I'll show you a little bit more in depth of what I'm looking at when I'm taking a trade. Okay, this was the previous contract here. So let's look at this entry here. So I've just picked these out. I never took these trades. I've just picked these out of the chart just to show. So they might not be in session, or they certainly are in volume, as you can see here. But this example here, you can see that we've broke a level. Okay, so we're breaking this level. Now, only two things are going to happen when we break a level. Can we enter? We need to ask ourselves one question. Can we enter on the break? Can we enter on the break? If we don't, the reason is because the candle that's breaking the level, you need to have the stop loss below that, okay? Or even below the previous candle. And if your stop loss is too big, usually I'm only looking for little moves like this. Very rarely do I stay in a trade for any more than 15 minutes. So for me, this is no trade if the stop loss is like this. Because to get even 1-to-1, I would need to get 3 candles. That's 45 minutes, okay? So, in this instance, we do have a clean range over here. You can see the clean range to trade into. So when this stop loss was up here, right? So stop loss is below the current candle. So in this instance, we could have took an entry. Because our stop loss is tight, we can get 1-to-1, we can get 2-to-1, we can even get 2.8-to-1. In our clean range, we've got this area here to contend with, or we've got this big clean range here. So this is where we would close some positions and let the rest run up to here. So let's look at this level and pull our here, and we see that we would have still got a 1.89. So we're definitely going to take this trade on the surge of the candle. This is very important. So the question we're asking ourselves is, can we enter on the very candle that's breaking the level? In this instance here is also, I don't like the look of it because it never formed a bottom wick. And this is very important. This is probably the most important thing I'm going to teach you what I'm doing to pass these evaluations. If I was to pick one single thing, this would be it. So when I'm looking at a candle on the 15 minute, okay, if you just look at the screen just now, it's safe to say that 95% of candles have a wick at the bottom and a wick at the top. So this candle doesn't here, okay? So it's not formed a wick at the bottom. So when this is live and this is going up and it's going up and it's going up, I'm not taking the position because I'm thinking it's not created a wick yet. So the fact that it's going up, that may be it creating the wick of a bearish candle. Then it comes back down and goes bearish because there's no wick. Okay, this is a game of probabilities. And the fact that this candle does not have a wick yet, I would not have took the position. Now, very important, very, very, very important. On the 15-minute time frame, the wick will be put in on the first 3 minutes of the candle, a high percentage of the times. So if you imagine the candle is forming, do not do anything for the first 3 minutes, because that's a high probability it's creating the wick, either the bottom wick or the top wick. And again, at the end of the candle, let's say this one is a bullish candle, the first 3 minutes creates the wick here, then it goes up, then what do you see at the top? A wick. So what does it do the last 3 minutes? It retraces to create that wick. So I do not like being in trades the first 3 minutes of a 15-minute candle or the last 3 minutes of a 15-minute candle. That gives me a 9-minute window from minute 3-4 to minute, let's say 11-12. I don't like being in the first couple of minutes, and I don't like being in the last couple of minutes. If you incorporate that into your trading strategy, you will do very well. And yes, you will miss trades like this one. We would have missed this trade. But it's good, it's a very good thing to build into your trading system, and it will really reduce your losses. So here's another one here. We've got a wick here, a range to trade into. We've got a level here and a level here, here and here. Let me just change the colour of this. Okay, so we break the level. Would we have took this trade? Would we have took this trade? The answer is yes, we would have. Now again, just disregard the fact that we're not in a session, because I've just picked these trades out for ease of making the video. But yes, we would have took the trade, and the reason we would have took it is simple. We would have probably entered a bit here, because our stop loss would have been above here, and we would have been targeting the bottom of this wick, and it would have gave us more than a 1-to-1, almost a 2-to-1. Now the other reason, big reason why we would have took this is the wick's already in. Okay, so when this candle opened, it went up here. Okay, I'll just zoom in. When this candle opened here at this level, it came up, okay, came back down, broke the body of the previous candle, broke the wick of the previous candle, and broke levels. So the level, we're breaking the level, we're breaking the previous candle's body and wick, and we ourselves have already established a wick. In the first 3 minutes this happened, we enter. That would have been a great trade. Ticked all the boxes. Again, just ignore that we're not in session. But this would have been a great trade. The wicks in the candle, 3 minutes are gone, breaking levels, breaking previous body, breaking previous wick, enter. Now let's try and find an example of where we wouldn't enter. Here's one here. Okay, this is a trade that we would not have took. We do have a range over here. It's a good bit in the distance here, because we've already cleared this. Okay, so if we come to the actual trade, why would we not have took this trade? Ask yourself, what is the reason we would not have took this trade? It's not the best example, but the stop loss is a bit too big. because to get a 1-to-1, again, it's probably not the best example because the candle isn't that big, but imagine this candle was down here. Even this, you can see all this here, all this noise, all this consolidation. So let's say, for example, right, I'm just going to not just cover this candle, I want to cover this consolidation because there's a lots of noise here, and we could come back down and sweep some liquidity that's sitting here. So to get your 1-to-1, basically 1, 2, 3, 4, 5 candles. You're in the trade for over an hour, and that's not our style. So this is what I do when I'm entering. Do I enter on this candle that's making the surge through? Where is my stop loss going to be? Right now, I will set a pending order here, hoping that this next candle. So if you could imagine, right, this here, this candle right here is printed, right? Let me just go into replay. Okay, so what I'm doing here, as this candle closes, right, when I'm in top step and this candle closes like this and my stop loss is going to be too big, I'm setting a buy order. Okay, I'm going to set a buy order to trigger me in somewhere like this. I'm going to put my stop loss just below the level, and that's what my order is going to be sitting here waiting. When the market's up here, I'm saying, right, let the market come to me, come and tap me in before its continuation, and it's the retracement, the wick of the next candle, because we're super bullish here. We're super bullish, so I'm hoping that the next candle, if I go in here and then the next candle creates a wick, I'm going to be in drawdown. Okay, so I'm waiting and just having my pending order sitting here waiting to get wicked in, basically. And that's the way I would trade. So let's show one last thing before we close this out. So I'll come back to these contracts. I just want to go over some indicators that I use just as confirmation. What I've showed you up until now is all I use, but I will use some indicators that I switch on, switch off, just to find out where I am in today's session. So the main one I would use is the session volume profile. So this tells me that this is the blue lines here. This is today's value area low, and this is today's value area high, and the orange line is the point of control. Okay, now you always pay attention to previous days, because what happens a lot of the times is when you trade into a previous days, so you can see here, this is the previous day's high, value area high, known as VAL, VAH, and VAL, value area low, and POC, point of control. So this is the previous days, right? This was Tuesdays. But what happens on Wednesday when we close inside yesterday's value area high? We come down and we wick the point of control. So these are very important levels. Sometimes it will come down, and I once read in a book somewhere that said 70% of the times when a candle closes inside yesterday's value area high or value area low, it will fill the area. So in this instance, we come in and we close inside the value area high. So that theory says 70% of the time it'll actually come down and hit the low as well. In this instance it didn't, but what I've found through my experience, if it does enter a value area high or a value area low, it might be a bit of a stretch to get it to go to the full other level of it, but it definitely isn't a stretch to go to the point of control. A super high percentage of times when you trade inside the value area high here, it comes down and hits the point of control, and look how accurate it is. Look at that, it's bang on. If you look at this wick here, look how it wicked into the point of control. It's to the wick, to the pip, right? So this is just something to be aware of, to look and see where you are when you're taking a trade, because it may be a case of your analysis of the breaking the levels and stuff like that, and it's only telling you to go for a 1-to-1 or a 2 to whatever. This tells you here where your target is. So I use this a lot. I use the value area high, the value area low, the point of control, and this VWAP, which is the session VWAP. These are the levels I would use to potentially exit my trade. I don't care about them when I'm taking a trade, when I'm entering a trade. I don't care about any of this stuff. But when I'm in the trade, I will then switch this on to find out where am I. Here's an example here. Here's an example here of a trade that we took, right? So we entered the trade here. Remember, this was the one that we entered when it broke VWAP and it broke the level, okay? So you can see here, it broke VWAP, it broke the level, it also broke point of control. And where did it go? Value area high. And that's where we exited our trade. Now, I never, in this instance, I was actually using this range here. That's what I was looking at. I remember the trade. But there's just another thing, another confirmation. It's the value area high as well. And you could potentially look back to yesterday and say, right, okay, I know the value area low and high is down here. But it could potentially, let's say your value area low for the day before this was sitting here, very close. So it's another level that you could say, right, I'm going to target that. And that's how you get your 4-to-1s, 5-to-1s, 6-to-1s. So that's a little bit more in depth of what I'm doing. Hopefully we pass this next week, and yeah, I can make another video and I will create a playlist. I'm going to make this into a playlist on how to pass prop firm evaluations, using everything that I've showed you, breaking levels. Again, we'll go back to the beginning here. So to pass a prop firm eval, this is basically all I've used. Again, what we said at the start, we need to be in a session, but not only, we don't just take trades because we're in a session. There needs to be volume, and volume is more important than the session. It's just that the volume, 90 to 95% of the times, it comes during a session, whether that be London, New York or Asia. Now, I've seen lots of instances. I actually trade New York myself. I've seen lots of instances where New York has been flat and the volume hasn't been there because it was there in Asia or it was there in London, and New York just looked a bit stagnant. I've not liked the look of it. I've not liked the volume of it. So I've not traded it. And that's how you can see those blank days in my trading. So you need to be in a session. You need volume. The other good thing about a session as well is it's more, right, this is when I'm going to sit at my PC. Because if you've not got a session, a defined session, you're going to be sitting there for bloody 8 hours a day. And that's not what trading's about. We want a bit of freedom, and yeah, we don't want to be sitting at a computer screen for 8 hours a day. So you need to define, this is my session, because it's a high probability the volume's going to be here in this window. My own personal window, I don't look at the markets until 2 p.m. in the UK. That's 9 a.m. Eastern Standard Time. And I will sit for maybe a maximum of 2 hours. Sometimes, most of the times, if I was to put an average on it, I would say I was in the markets between 40 minutes to an hour. That's it. So session, volume, clean range and breaking a level. There's, I have took trades in the past breaking levels, by the way, when there's been no clean range, because you're making new all-time highs and there's nothing to the left. So again, the clean range is there most of the time, but sometimes you just need to use your initiative and say, right, well, there's nothing to the left because we're making all-time highs. So if we've got session and we've got volume and we're breaking a level, you know, maybe instead of risking $1,000, I'll risk $500 because there's that clean range isn't there. That's the way you could kind of structure it. So I hope this video has been useful and helpful. Again, I'm going to put this into a playlist on how to pass an eval. This is the 4th video. Hopefully the 5th video will be the final video in at least this one. And I'll keep making them. The next challenge, I'm going to actually try and up the risk a little bit more and try and maybe risk, I don't know, maybe $1,000 or $750, try and pass it in a week. But yeah, pass the playlist to a friend who's struggling to pass prop firm evaluations. Until the next time, please stay safe out there. Broke through this level here in this previous trade. Then we come back and you can see that we retrace back, retest it, 1 big wick, 2 big wick, 3 big wick. It's basically rejecting the level, so the resistance before is now becoming support. How many times have we seen that? We're getting big massive wicks. What are they wicking off of? They're wicking off the VWAP. See the VWAP there? This purple line. So again, we've got so many different confirmations here. We went long here, got a good trade. We're now retracing. We're wicking this level to create a new support. We're wicking VWAP, which has been respected. This big massive volume candle comes in, and then I enter because I just see a surge of buyers coming into the market, and I know in my bones that we're targeting this area here, the next high. And as you can see, look, it got it exactly before coming back down. So this was a great trade, almost to the pip. I mean, if my profits had been up a little bit higher, I wouldn't have got this trade. But yeah, we were right on that level, so that was a great trade. I'll put this down here. So that was on Thursday. So then come Friday, we have a losing 2 trades on Friday. I don't have them marked on the charts here. I think it was actually in the London session. I think it was breaking below this triangle or something. But yeah, we had 2 losing trades here. We lost $1,000 and then we ended up, I just reverted to what I know, reading the tape. I don't like trading, like reading the tape. I do very well when I do it, but I mean, it's so intense. You're glued there. I was probably glued to the market for about 3 hours trying to recover the $1,000 that I had lost. So that's it for this week. Again, we were up $388. So again, if this is spread across, because what we're looking to do here is we're looking to pass these within a week, and then we're going to stack these accounts up, because we want to have, ultimately we want to have, let's say 5, maybe even 10 accounts. So and we'll copy those accounts, but we're going to totally change our risk parameters. So just now when I'm risking 750, when we go to when we're funded with this, there's no way we'll be risking 750. We will be risking somewhere in the region of $150 to possibly $200. But the way we're going to make money is we're going to stack the accounts up. So we're going to have 10 accounts, let's say, and we're copying them all. So we place a trade on one, it executes a trade on them all. So if you're winning $100 or winning $200, you're actually winning $1,000 or $2,000, and that's the way we're making our money. Even if we were doing that here, you would see 388. You know, it would be about 3,000 or 4,000 you would have made this week. But we need to pass these evaluations, and in the process of passing these, we're going to blow some accounts along the way. We've already blown this account. This will reset in possibly 10 days time, and I'll get another 2 chances on this, and then this one will reset. I'm actually on the, I don't know if this is the first or, I think this is the, I don't know if this is the first or second chance on this one. I don't know if I've actually reset this yet, but yeah, until next week guys, please stay safe out there.